Welcome back, everybody, to Be the Trader. Today, I have a very, very special guest, Dr. Brett Steenbarger. A lot of you guys probably already know who he is. He's an author, well-known speaker, as well as someone who coaches a lot of traders out there in the trading world. Dr. Brett Steenbarger, thank you for being here, and welcome to the show, my man.
Well, thank you very much, Alex. I appreciate the opportunity to speak with you and your audience.
Absolutely. I'm so happy to have the opportunity to have you here. And, for those who may not be aware of your background, can you give them just a quick, recap?
Oh, sure. Well, I have really a triple background. I've traded in financial markets myself since the late 1970s, so I'm dating myself. I also work with professional traders at hedge funds, asset management firms, proprietary trading shops. I work as a performance coach with them. And the third part of my life is that I teach at a medical school, and I teach approaches to psychological change, therapy approaches, counseling approaches, how to make changes. And it's really applying those techniques to the world of trading that is my specialty.
Nice. So speaking of change and applying change, just a question that just came to the forefront of my mind is when traders are trying to grow and let's say they found their consistency, right? They found what they're good at, and then they just increase their size or step up to the next level, and then maybe they're fine. But then they get to some point in their career where there's that level where they just feel like it's different.
Right.
Why is that? I mean, have you ran into that before with other traders?
Yes. And usually it's a version of what we call performance anxiety or performance pressure, that at some point the P&L, the numbers get inside our head. Okay. And it becomes more about those numbers than about the trade itself. Performance anxiety occurs anytime we focus more on the outcome of performance than on the doing of performing. And if we get large enough, those numbers start to get inside our head. So there are some techniques for dealing with that. In fact, I have a recent blog post on my Trader Feed blog on how to size up your trading the right way. And I also have a Forbes article just this weekend on how to make changes in your trading. So if you Google Forbes and Brett Steenbarger, you can get all those articles. Or if you Google Trader Feed, you'll be able to see that. The main thing in working on the performance pressure is to build our size gradually. The analogy I use is working out in the weight room. And so if I work out at a certain weight, if I'm lifting a certain weight, well, at some point doing 3 sets of 10 reps is easy for me. So I got to move up to the next weight. But I don't just double my weight, right? I don't just go from lifting X pounds to 2X pounds. I raise it gradually on the weight machine. And then I do 3 sets of 10 and get used to that level. And then I raise it and get used to it. And so I gradually build my strength without breaking myself down. What happens with traders is they get too eager. They set the weight on their trading machine too high and they break themselves down.
Okay. What about I think there's something to be said. Let's say you are trading and you are using the weight methodology where you're just slowly increasing, right? Let's say you are doing that, but I'm sure there's some who might still do that, and then they get to some point where maybe that performance anxiety triggers, and it's like the size or the number. How do you? So they've been incrementally growing. How do you help them? Or any advice that they could do to get back into the zone of not thinking about whether it's money or whether it's, oh man, this is like maybe just some number in their own head that they made up that they just never thought they'd get to.
Right. Well, sometimes people bump up their size, and they get to a size that's just too large for their account size. And they're feeling anxiety for damn good reasons. Okay. They could lose a chunk of their account if they just have a few losing trades in a row. And all of us have a few losing trades in a row at some point. So there are limits to how much we should bump up. And sometimes we're anxious about that for good reason. So it's not always a psychological problem. But I would say, and I'll use an analogy of the prop traders that I work with. You probably know I work with guys at SMB, and I put it out there. So they have a daily loss limit. And so we size each trade as a fraction of the daily loss limit. Now, when they are ready to bump up to a higher daily loss limit, they trade a new size, but it's the same fraction of the daily loss limit. So let's say my size is 1/4 of I'm willing to risk 1/4 of my daily loss limit. Okay, so my daily loss limit today is 1,000. Mm-hmm. And then, I'm a developing trader and I'm doing well. So they say, okay, now it's 1,600. Okay, so now I'm risking more per trade in dollar terms, but it's the same fraction. I think in terms of fractions. I don't think in terms of dollars. That takes the ego out of it. And so it's the same trade. It's 1/4 of my daily loss limit. Eventually, hopefully I'll be so successful, I'll have a daily loss limit of 10,000 and then 50,000. And okay, you get it. But it's the same principle of risking that fixed fraction of the daily loss limit. And that keeps it standard in our heads.
That's a good point. And two things that you mentioned. Number one, the fact that you could be gradually growing, but it could get to a point where it might be significant to your account size and you might be growing too fast, even though you feel like you've done it the right way. And I think the other part is the ego that you brought up. Speaking of ego, when you're in a trading prop firm, as you mentioned, and you're surrounded by other traders, I'm sure there's a lot of challenges too for them where they're comparing each other and they're like, for us, like, retail traders, we're looking at Twitter, right? But for prop traders, you're probably in a room seeing everyone do well. Maybe you're having an off day. Any advice for those traders who are going through that, or does that not happen in prop firms?
Well, one of the reasons it doesn't happen so much is that the traders are organized as teams. And so you have a senior trader who heads up the team, who's an experienced, successful trader, and then more junior people who are part of the team. And they do their preparation for the day together as a team. They review their ideas during the day as a team. They review at the end of the day as a team. Okay, so yes, some traders may be doing better than others, but they're still a team. It's just like if you're on a football team and this guy over here scored a couple of touchdowns and I didn't score a touchdown. Well, no, I mean, you're a part of a team. You see, okay. So the team mentality really takes that ego out of it. Plus, it makes it a learning culture. And that's what we want to see online as well for the retail trader. We want to see traders teaming up with other traders or maybe being part of a community where everyone is learning to take the ego out of it. In fact, you have to be humble to be a learner, right? You have to be open to learning, right?
Absolutely. Yeah. And speaking of that, being open to learning, how everyone says, or not everyone, well, most people that I hear are always saying, stick to one strategy that works for you, stick to one or two when you're finding your bearings. What are your thoughts on that? Because, being open to learning, I myself, sometimes I found what I'm good at, and I've interviewed tons of traders on here, and they'll be like, hey man, you should come learn this. I'm like, nah, I like to stay in my lane. So I'm just curious on what's the right mentality.
It's a really good question. And there is something to be said for staying in your lane, but as markets change, you have to change your lane. So it's a little tricky here. So let's say that you're very good at quick pattern recognition. So your lane is going to be short-term trading. Okay? And that's the type of trading I do. When I get out of my lane, like I would love to be a longer time frame trader and investor and catch big moves and do that. When I do that, I suck. Okay, that's a technical psychological term. No, seriously. I mean, I really screw the proverbial pooch when I get out of that lane because my core skill is the short-term pattern recognition. Now, in different markets, the setups are different. let's say, depending on volatility. We had this volatile period from mid-February to mid-March, and the volatility's come out earlier in the year. In January, we had very low volatility, around the 12 VIX. So the way the market sets up on the short time frame is different. And so I have to stay in my lane and be that short-term trader, but I have to adapt my tactics to adapt to market conditions.
Understand. That's a good point. So you got to be adaptable. It's pretty much with your strategy and keeping in mind what the market is giving you at that time. Because you're right. I mean, the VIX, was wild these past couple of months, and there was moves like pretty much, just stay in your lane. You can catch a lot of meat. So
and a lot of traders did. And when the VIX was under 12, there was a lot of frustration because everything's chopping around, nothing's really moving. So yes, we have to adapt, and that's why there's always that learning. Even the experienced traders are learning new things to adapt when they stay in their lane. Now, sometimes they will take their swim lane and adapt it maybe to a different type of market. So for instance, maybe I've been trading the overall market, let's say the SPYs or the ES futures, but now I see some opportunities in these high volatility individual name stocks. I could apply some of the same trading insights to this new area. So that's another way of expanding our business.
I'm curious, are you a more of a long bias trader yourself, or a short bias, or both? Or
yeah, when I'm trading poorly, I'm either long biased or short biased. When I'm trading well, I'm open-minded. And actually, if I start trading very early in the session, this is turning out to be a confessional, man. When I start trading early in the session, in the first few minutes, I do not do well. I really benefit from sitting back, looking at the order flow, looking at what levels we can and can't take out. And at some point early in the trading day, it becomes clear to me the buyers can't get it done, or the sellers can't get it done. We're seeing selling, and they can't take out the overnight low. Or we're seeing buying, this happened on Friday, we see buying, and we're not taking out the overnight high. Those buyers are going to get trapped. And I want to be open-minded to take advantage of when they need to puke out of their positions. If I go into the market session saying, oh yeah, I think we're going to rally, the virus is over, or this is a bear market, it's going to go down. If I go in with those kind of fixed opinions, I'm no longer listening to the market, and I can't adapt my trading.
Interesting. So just curious on this, I'm thinking when it comes to staying in your lane or your strategy, it's more of, maybe I only short, right? I'm only a short bias trader. I only short a couple of patterns. But it sounds like, maybe I'm wrong here, but so just to clarify, is it more like in the prop area, it's like your strategy is not specifically to that specific pattern. It's more of how you trade in terms of very short term, very, very flexible, or very long term, or riding the trend. Is that more of so the focus?
The patterns will set up on the short side and the long side. Okay. My response when I hear a trader say, I'm a short side trader, or I'm a long side trader, my response is WTF. That's my response. Okay. It's like a baseball player, a hitter. And he says, oh, I'm only a fastball hitter. That's what I do. I mean, seriously, WTF? I mean, so they're going to throw breaking balls and off-speed shit at you all the time. Okay, so you can't be inflexible. You can't be just this one thing, right? And so, again, our job is to adapt to market conditions. So there are patterns that set up on the long side and short side. In fact, I have some of them on my Trader Feed blog. Some of the indicators that I use, like the NYSE tick, where you can monitor the buying and selling pressure and see how much it moves price. That sets up for short trades. It sets up for long trades. We want to be flexible.
Understand. I like that. I mean, that's just something that a lot of people just hear. You have your style of trading and think just short or long. But I like how you're saying it's more of your style of trading, but you got to still be open-minded, and you could be both. and you should be both. It should just
Have to be both. Yeah, the style of trading is more about the type of information that you process and the time frame of information. So the type of information would be like fundamental information, technical information, order flow information. That affects our style of trading. And then the time frame. Some people are, again, are very fast thinkers. Some people are slower, deeper thinkers. That's going to affect our style. But just being long or being short, biased, that's being closed-minded. And I don't know any traders long-term who succeed being closed-minded.
I appreciate you saying that and sharing that information. I'm curious on the idea of, so there's some traders, I get messages regularly, I'm sure you get tons of messages, where you'll have traders who are in the other cycle where they're just like in the boom and bust, right?
Mm-hmm.
And so what have you found, especially because you're teaching or you're helping teach new traders when y'all recruit new traders in these firms, what have you found has been I say easy, right? But the easier solution to that problem?
To the boom or bust.
Yeah.
Yeah, so we don't want to get anchored psychologically to our most recent P&L. In other words, we want to be process focused, not P&L focused. So if I have 5 good trades, 5 winning trades in a row, it doesn't mean that Jack Schwager should come and interview me now. And if I have 5 losing trades in a row, it doesn't mean that So we don't want to be anchored to the most recent returns. And the way to do that is to grade ourselves by process, not by outcome. Am I doing the right things? Again, to go back to the baseball hitter, am I swinging the right way? Or a golfer, am I swinging the club the right way? Am I choosing the right club? Now, sometimes it's going to work better than other times. But if you get the process right and you focus on consistency of trading, that takes the boom and bust out of it.
It's easy to be focused on consistency and you're doing the right track, right? And then it's like, how do you celebrate without slipping into the wrong mindset? You know what I'm saying? Like, you're doing well. Let's just say in general, not even just a boom and bust. So you're doing well and you want to celebrate. But it's easy when you want to celebrate, but man, I've been doing really well. Here's why I've been doing well. And then easily to just have a couple, slips the next couple of days because your kind of ego kind of got inflated, if you will.
Yeah, I think there are ways of celebrating without getting your ego involved. And celebrating without the ego would be appreciating. You appreciate that you've done well. You appreciate the people who helped you do well. You thank them. If you're living with a partner, you appreciate their support. Maybe you have a little reward for both of you that if you had a good week, you're going to do something fun together. That is celebrating, but it's not an ego form of celebrating. Okay? Just like if you lose money, you shouldn't be, you're going to learn from it and you're going to correct and you're not going to feel great about it, but you shouldn't punish yourself. It's again, that would be putting the ego in it.
Interesting. I like how you separate, you're appreciating rather than celebrating specifically. And I think that's actually going to help me out. So I appreciate you saying that.
You don't want to be in that high-fiving mode, I know, again, from my own trading, the second I get the thought of, I've figured this out. I think I got it. What's going to happen next?
I already know.
Okay.
it's so funny. Like I was just side note, I was celebrating a good month, and then what happens the next day? Not anything bad because I have max loss just like you guys do, but it's just it's almost like you feel it coming.
Right. Because it's the ego taking over. So, interestingly, if I got myself in an ego mode and I find myself high-fiving, the next day I would want to size down. It's a risk factor. The ego is a risk factor. So it doesn't matter if our previous P&L was positive. Getting the ego involved means we're listening to our own heads. We're not following the market. And so I would want to size down, actually. That's a risk factor. So
That's a great point. That's a great way to think of risk and adding that to your equation to determine your size. I think that's great. I appreciate you saying that too, man. And I'm curious on what have you personally have found. Well, let me ask you this first. Do you also help traders who are not in prop firms sometimes, or work with some?
I don't work with independent or retail traders. I don't, and simply because I don't have the bandwidth for it.
Yeah.
The other reason I don't work with independent retail traders is that actually I don't feel that the trading psychology should come first. I think they need to learn markets first.
Understand.
And then once they've learned the markets and how they trade and set up and what influences them, and then they're starting to trade and they make some mistakes and they do some things well, then the trading psychology is quite helpful. It would be like a beginning athlete. If someone were working in a sport like pole vaulting, well, and then they say, well, I'm going to get a pole vaulting coach. I talk about get my head right when I'm pole. What? I would. What help would I be? First they have to learn the technique and practice that. And then once they have that down, yes, their confidence going into events will matter, their preparation and so forth.
I guess what I was trying to get to more so is more of like when I'm sure you guys sometimes have traders who come in who already have retail experience and then they come in and then you work with them sometimes like that too, right? Maybe?
You mean who just join a
prop firm?
Yeah. So that's how they first got involved, was opening a retail account, of course.
Okay. So I didn't know everyone got involved that way first before coming in. But what I was trying to get to is, have you seen a difference? Or I guess let me just scratch that. Is there something that you've noticed in traders who are fresh in their career that really stands out, but isn't as important as they think is?
So they think it's important, but it's
like,
not.
If I fix this, I will be successful. But in reality, that's not really what they should be focused on. Does that make sense? Like They have the wrong thought.
Well, the wrong focus in a way.
Mm-hmm. Yeah.
Yeah. I think in many cases, focusing on psychology is the wrong focus for the beginning trader. I really do think so. They're not going into detail about what they're trading, how it trades, how it works for them, what happens when like we said, the volatility changes, different times of day, things set up differently. They're not really studying and working those details. Instead, they're trying to focus on, well, if I'm just more confident, I'll make money. Well, no. As I say, if you haven't learned the market, but you've worked on your head, you'll lose money in a more calm state of mind. Great. Wonderful. So I think sometimes for the beginning trader, trading psychology itself can be overemphasized. The other thing that's overemphasized is, quote unquote, I have a passion for trading. Give me a break. You have to have a passion for learning markets. A passion for trading is like a passion for going to Vegas and playing the wheel, It's not a passion for risk-taking and trading. It's a passion for learning markets, a passion for self-improvement. That's what makes great traders.
That's a good point. And because you always hear that, like, I have a huge passion for trading. I have a huge passion, but it's more of, you're right. I mean, it's more focusing on growth, self-improvement, because that's what will get you to the next level.
Right.
And
so when someone says to me, I have this big passion for trading, great, show me your trading journal. Let's see how detailed it is. Let's see how hard you're working your game.
Are your traders still working on the trading journal throughout their entire career? Or is it more of like, when you get to this level, it's not as detailed as it used to be? Or is it,
it's still with them. And I've worked with some well-known traders. I'm not going to name names, but they work it every day. And they're following their trading and what's working, not working. And absolutely. One of the very top traders I work with currently, he's the top trader, maybe the top trader in the firm. Every single day he's sending me his journal. And this is a guy, I mean, already, here we are beginning of May, he's well into seven figures of what he's earned. Every day he's sending me a trading journal.
That's interesting. What is it you see different from his journal and someone who just starts sending you their journal?
Well, it's a level of detail. In other words, someone could put a journal together and said, "Oh, I lost discipline. Tomorrow I'll have to trade." Right. But a detailed journal says, "Here is what I was trading. Here's how I was trading. Here's what I was looking for. I need to do this differently. This is what I did well. I want to make sure that what I did well, I keep doing tomorrow." And they're journaling about their psychology. They're journaling about their trading, but they're journaling about how they're trading. There's a level of detail there in their review process. It's not just a general one paragraph, "Oh, I lost money. I'll need to be more careful tomorrow." It's not like that at all.
Interesting. And so, at the end of the day, this is a profession, and that's what they're taking it as. Like, I'm taking this very seriously. This is my professional career, and I'm trying to improve constantly. So they're like very analytical, it seems like, about their entire process.
Yes, and they're serious about it the way an athlete is serious about developing themselves as a performer. One of the things I've pointed out on my blog is that in every performance field, think about acting, think about music, singing, think about chess, think about weightlifting, basketball. In every performance field, people spend more time practicing than actually performing. They spend more time working on their game than playing the game. How many traders do that? Okay,
I'm sure a lot are listening right now and be like, "I don't know."
Oh shit! I've been busted. Yeah, absolutely.
I am passionate.
Yeah, exactly. But I got a passion for trading. I just don't work on it. Yeah.
Oh, okay. That's awesome.
But no, this is a very important principle that to be an elite performer, you work more on your performing than actually doing performing. You practice more than you actually perform. Think of the Olympic athlete. How much practice goes into, how much development goes into the actual performances for a few days, for a few events. But it's almost like a lifetime of practice.
Absolutely. And before we start wrapping this up, I'm very curious on a couple of things. Number one, if you personally could go back, let's say you can get a time machine, go back in time, and you could give yourself a piece of advice to improve your own trading to get to where you are now quicker, what would you say?
Know yourself. As I mentioned before, I've tried trading in different ways that just were not my strength. And you have to know yourself. You have to accept yourself. There was a time in college when I played basketball. Well, I was not the highest jumper or the most athletically gifted person on the court. That's putting it modestly, okay? All right. In fact, I tell a story. I was in a scrimmage game, and I positioned for the rebound. Yeah, I got in front of the player I was defending, got in position for an offensive rebound. Player jumps over me, and I look up, and I can see the bottom of his tennis shoes, of his gym shoes. The bottom! This was the good Lord telling me, this is not your profession. This is not your field. But the point is here, we have to accept what we're really good at and what we're not good at. We can't try to make ourselves something we're not. And that's the advice I would give my younger self. There are certain things you do really well. Make the most of those. Don't try to be somebody else.
Good advice. Good advice. And Brett, I appreciate you being here. And I know you've said your blog, which is a phenomenal blog. I love your blog. I love the Daily Trading Coach that you wrote. Yep. If you could share just a little bit more information on where people can find you, or maybe they have questions to get answers to, Could you share that real quick?
Yeah, so my email address is also on my blog. If people have specific questions, the blog is called Trader Feed, TraderFeed. So you could just Google that, but the actual URL is traderfeed.blogspot.com. But just Google Trader Feed. And then there is a link to a free blog book that I wrote. Yep. That's about spirituality and trading, and that might be of interest to some folks, and links to the various books and also Forbes articles that I write. So a lot of material there. There are over 5,000 articles on trading psychology that I've written since 2006. But who's counting?
No, because you brought that up, before we wrap this up now, 5,000 articles. The question is, like, are you, like, what are you, like, how is there 5,000 articles? Please explain. Like, you would think after like 1,000, you kind of run over the topic.
Right. Well, markets are always changing, and some of the articles are about markets, and then there's new research in psychology, and I try to cover that, and so that keeps it fresh. And and I've been doing it consistently, so it's built up over time.
Absolutely.
But one technique that's really worthwhile, any topic that you're interested in trading, like today I wrote something on how techniques, proven techniques in psychology research for overcoming trading on tilt. Okay, that's my latest blog post, which is relevant to a lot of traders.
Yeah.
Okay, but if you Google any topic you're interested in, like tilt, and then Trader Feed, just Google that, all the articles I've written that have that topic will show up, and you'll have some readings.
I'm gonna be reading a lot this so I appreciate it. I didn't know it was that easy just to type in, so I'll do that.
Yeah. So like discipline, Trader Feed, you just type that in, and you would learn a lot of So
perfect. Well, I tell you what, Dr. Steenbarger, I appreciate you being here today. I gain a lot of value from this. I know the listeners are definitely going to gain a lot of value from this. So thank you so much for being here and spending some time with me this morning.
My absolute pleasure, Alex. Thanks for having me.